G'day everyone, welcome back to Pete's Investing. It's October 27, 2023. This is the Nikkei market update. So you can see here on the weekly, daily and hourly, all of our CCI indicators are showing bearish momentum with some very minor pullbacks towards their moving averages. So let's go to each of these. So you can see here first off, on the weekly, we're showing a bearish momentum on the CCI. It is turning down and breaking through its moving averages. And if I zoom into this Fibonacci range here, you can see there it's just that wick has bounced off that 50% level and it's currently broken below the 38% level, so it's making further downside and no sign yet on the weekly at least of a pullback to the upside. Again, in terms of divergence, we do look at divergence, and here you can see there's a bearish divergence on the CCI very long term versus the price, and you always take heed of these. So if you had seen that around this period here, you would have been wise to get out of any long trades. Now that's the weekly. Again, that's a long play, so very hard to trade that unless you've got some very good patience in that area. On the daily, we've got here the CCI 400 is broken down into a bearish momentum, likewise the 150, and you can see there it's currently bouncing off that minus support at 3460. If I zoom in there, 3460, and you've got a hard support at 3270. There's a minor resistance there at 32,650 and a hard resistance there at 34.15. Now it's currently giving us a double bottom there on that level there, but given the CCI showing no sign of a bounce on the daily, there's no major bounce or major retrace yet on the daily to be aware of. On the hourly though, we do have if I zoom out a bit, we do have a bullish momentum or a bullish divergence on the CCI versus the price. Now we did have a couple of them actually. There's one back here versus that period, and it actually bounced and hit our 38% level of the Fibonacci. And for those that are not familiar with that or are new to the channel, we always go back to the closest Fibonacci range. You can see there between the 23% and the 38%. That's our initial target area. We don't get too greedy and too aggressive to go for any high levels. Of course, they can break. You can see here this price actually broke and landed just around the 50% Fibonacci level. We always choose the closest Fibonacci range to be have a higher probability of success. And what I do is I do keep those rectangles in there, which were targets of bearish or bullish divergence. You can see there they've all been hit, and if they don't hit, I mark them with a cross, meaning they failed. Now in this case, we've got another bullish divergence here between those higher lows on the CCI versus lower lows, albeit very slight lower lows on the price. And we're going to see a slight, and it's already starting to pull back as well. It'll be very similar to that range we had previously to that area. So if we just move that, you can see there, it's just a very slight difference. They're probably going to pull back into that area there. And if I draw another target area reference, that'll be somewhere between there and there. So that's where we are at the moment. Overall, all three timelines are showing bearish momentum. Just be mindful of these little pullbacks and retraces. And you can trade these, but again, they're pretty fast on the hourly. They do happen occasionally on the day. Well, they do happen as well on the daily and the weekly, as I showed you on the weekly back here. Be aware of that. And on the smaller time frames, what I do use these for primarily is, in this example, if you're going short and you saw a divergence like you do here, you'd be wise to take your profits and get out of the trade if you're making profits during this short period. So if you got value out of the video, hit that subscribe and the like button, hit that notification bell. Thanks for watching, and see you in the next video.